Yo guys, welcome back to Stocklock Insider. Today I want to talk about PayPal. PayPal is one of the positions I started making since actually a lot of times that I tried. Now I have the feeling that I've eventually tried enough to have a stable position right now. I always had some positions with higher conviction, but right now, in my opinion, the story of PayPal has changed and shifted a lot in my opinion. Also, they are standing way too strong against their stock price. So, well, a little way up already should be already a nice investment, because that's literally the thing that should happen for PayPal, because it's a way it's a company that's way too stable actually. Just the only thing is that there's not really the revenue growth which people want, but again, it's also coming back to the 7, 8, even maybe 9 percentages of revenue growth. So that's nice, but talking about more detailed stuff, we'll go into this video in a minute. And yeah, just for now, PayPal is a position I want to build out even more. As you see, I have 61 shares of PayPal. It's actually not really a big position, but if you put it in the category of worth, it's the 4th largest position for me. And yeah, just above it is Elf Beauty, but I want PayPal to be actually 3rd in this portfolio. Then I want Elf Beauty, then I want Shopify, and then I want Honest. Even though actually I want Shopify, PayPal, and Elf Beauty to be a little bit of the same size, but again, there has to be some hierarchy, and yeah, that's what I want to do. So PayPal, a lot of conviction in the stock. That's why I eventually now have the capacity to make a nice position in it, and enough conviction. So just a little bit before we start, I did have some positions that I sold, bought. That's why I already have 220 euros, which is not a lot, in realized profit gains. But now I really want a position for the long term, because there's not that many stocks that have my higher conviction than these stocks. Of course, Honest is still a risk play, but then again, I believe in the fundamentals. I just need something like this in my portfolio, because you need something to play with a little bit, to learn, and also just well, you need some risk to have some higher reward sometimes. So that's also a position I want to build out, by the way. So already talked too much, already 3 minutes in, but we'll go into the full video of PayPal. So today we're going to break down PayPal, a company that many investors walked away from, but one that is now quietly entering one of the strongest turnaround phases we've seen in the fintech years. This is not the same PayPal from 21 or 2022. The business has changed, the leadership has changed, and most importantly, the financial trajectory has changed. And the market still hasn't priced that in, so let's get into it. And well, starting with what PayPal actually is, well, I have a whole document made up together with ChatGPT, of course, but just to make it as clear as possible. But yeah, PayPal is not just a checkout button. PayPal is one of the largest global financial infrastructure networks, processing over 1.5 trillion, that's a lot, dollars in payments every year across 200 plus countries and 430 million of active accounts. It provides the following: online checkout. So we have online checkout for e-commerce stores, merchant processing for enterprise platforms, peer-to-peer payments through Venmo, fraud detection and identity scoring, subscription billing, cross-border settlement, and the digital wallet services, of course. PayPal is essentially a backbone of digital commerce, similar to Visa and MasterCard, but optimized for online transactions, especially for online stores. This is embedded infrastructure, not a replaceable app, and just wants to make things way easier for paying. So we have the PayPal checkout, so the pay with PayPal checkout button used on the e-commerce stores. You're probably already seen that. This is a high conversion and consumer trust, so that's the strategic role we're also going through. And the margin profile is that this is a medium margin, but a medium margin is literally perfect if you have this as one of the main things to come out as PayPal. And yeah, this is literally the thing that gives people a lot of trust. That's actually what I want to talk about here. So Then going forward with Braintree, this actually scales across large merchants and platforms, and this is actually an enterprise payment processing like Stripe competitor. And yeah, going forward, this is a margin improving through repricing. Then we have the Venmo, social peer-to-peer wallet with debit and app-based financial services, which is a cultural relevance and now entering monetization phase. So this is, in other words, jumping on trend so you can compete with competitors. The margin is rising as commerce rolls out. And of course, the risks, fraud, identity intelligence, which is AI-driven fraud scoring and behavioral identity verification. The data moat is extremely defensible, and it has a high margin recurring revenue because this is not really a product you have to put in that much of money when it's actually being coded and when it's built up in the right way. Strategic summary: PayPal is actively shifting from volume-based growth to profitable, high-value revenue mix. So yeah, the core products and why they matter is, we have the PayPal checkout. This is a pay with PayPal button. It's trusted, familiar, and converts better than standard card entry merchants. Keep it because it increases completed sales. Braintree, which is the Stripe competitor. This is PayPal's enterprise payment engine. Uber, it powers payments for Uber, Airbnb, Spotify, Meta, and DoorDash. Historically, Braintree grew fast but with low margins. Now PayPal is repricing contracts to improve profitability. This is one of the biggest drivers of margin expansion going forward. Of course, Venmo, we already talked about all of this, but I want to make it even clearer with more details. Venmo is culturally embedded in the US, but up to now Venmo was mainly peer-to-peer, which generates almost no revenue. Now Venmo is being integrated into e-commerce checkout and retail, meaning merchant fees, subscription billing, and higher margin revenue. This is a monetization unlock. Then the risk, fraud, identity intelligence. So I already talked a little bit about it, but this is the PayPal's moat actually. And this is what it takes it away from competitors. And this data layer is trained using trillions of transactions. It reduces fraud for merchants and improves approval rates. This is high margin, hard to copy, and extremely valuable for PayPal on its own. The turnaround: new CEO, new priorities. In September 23, Alex Chris became CEO. He's not a hype leader, he's an operator. So he shifted PayPal from user count to high value active users, value at any cost to profitability first, P2P Venmo to commerce monetization, and the sprawl to core product focus. So actually it's overall a better business already, with only your shift going to that. The turnaround begins in margins, not revenue, and that is exactly what we're seeing. And that's actually something you can talk about with Honest, the other company we're always talking about on this channel. Turnarounds begin in margins, not revenue. That's why revenue can decline or be very low, but in the meantime, margins are stabilizing and net profit goes higher. Going forward to the earnings evidence, the data supports the shift, and recent earnings show clear improvements. So the key financial metrics which are current, so we have the revenue growth going up to 8 to 9% again, which is improving. We have the operating margin up year over year, which is improving. We have free cash flow of plus 5 billion, which is a lot, so strong and stable. Total payment volume of 1.5 trillion. So steady, slightly up even. And share buybacks is increasing. This is accelerating EPS, and this is one of the biggest catalysts for PayPal. Of course, the Venmo monetization, which is still early status, and yeah, it is improving. So going to the last one, we have the Braintree margins, and historically low, so there's a lot of margin to be made, and it is now improving. This is no longer a declining story. This is a recovery in progress with even very good evidence. The major catalyst, so which that most investors are mostly missing, which is the PayPal plus ChatGPT integration. PayPal is now payment system inside ChatGPT, or will be, enabling in-chat purchases. As conversational commerce grows, PayPal becomes the default transaction and backend. Fastlane one-tap checkout. This reduces checkout friction and boosts merchant conversion rates, and merchants don't remove solutions that increase sales. This is sticky adoption. Then the Venmo commerce expansion. So the moment Venmo becomes a checkout method, revenue per user increases a lot. Braintree repricing, so the transitioning from growth at any cost to profitable enterprise processing, which was already talked about. The cross-border volume recovery, so international transactions carry higher margins, so boosts EPS. And with PayPal, you really have to have a better EPS growing each year, for actually the stock price to be even more undervalued or eventually following it. Regulation pressuring Apple Pay NFC. So if Apple is forced to open tap to pay access, PayPal and Venmo return to in-store payments. Share buybacks at low valuation, and EPS rises even if revenue is flat, mathematically unavoidable. So yeah, with all of this going on, stock price staying where it is, even going back to the 60s after going to almost 80s. Well, yeah, that brings the stock to even more of an undervaluation. So the valuation at this point, this is where it gets interesting. PayPal currently trades at 12 to 14, well, 12 between 14 PE. Price to free cash flow is 9 to 10, and the market cap stands at around, under or above slightly 70 billion. This is the value stock pricing on a company with strong free cash flow, improving margins, a clear turnaround roadmap, a major monetization growth cycle, growing EPS, and if PayPal reaches $12 of EPS by 2030, which is a realistic execution target, then we have the following. If I put it in here, no, so I will talk about it. We have a conservative rate of 15 PE, which brings it with that $12 of EPS, so keep the $12 EPS with each scenario in mind, brings it to $180 in a conservative way. A normal fintech re-rating, so all of the things go normal, revenue is growing normal. Then we have an 18 to 22 times PE, which brings the stock price to 260 and 264 possible in dollars, of course. So the bull case brings it to 25 PE, in my opinion, and above $300 by 2030, which is and can be less than 4 years, because if it happens in the beginning of 2030, then this is less than 5 years, so around 4 years, and otherwise by the end of 2030 it should be 5 years. This is another 3x to 5x upside with requiring hype or unrealistic assumptions. This is just based on, well, the basics. So a financial summary is that PayPal is not declining, not dying, not irrelevant. It is profitable, cash rich, deeply embedded in global commerce, undergoing a measured data backed turnaround with monetization and margin expansion runaway ahead. And well, yeah, if you just look at this here, it's too damn strong to ignore and keep the stock price where it is. And with all of the catalysts coming and starting to wake up, well, the market is still pricing PayPal based on its past, but the future trajectory is improving and is already being ignored for a while. And yeah, this is what opportunity looks like before the re-rating happens. This is one that's been in the making for a while right now, but I think there are some things, as I said before, starting to wake up, and now just investors around the stock will need to wake up and pick it up again. But yeah, I believe a lot in the stock. I want to add more, and yeah, thanks for watching. See you later, guys.